We are going to move from a resilience to a natural brilliant state.
We're all here to move our Black communities forward.
We think our children have to have the best. It's all about discipline.
How are we going to discipline ourselves so that we're able to save, so that we're able to make good financial decisions?
Recognizing that there's a road ahead if you manage the road in front of you.
The decisions that you're going to be making today in your lives where it comes to money will affect you in the future.
Discipline is one of the things that we often learn, sometimes by our environment, or sometimes we're forced to do it, and sometimes we don't learn it at all.
Stores want to get us in and out and get our money, and that's it. It's a game, so you have to be really wise to the game.
Do you know what it costs to run your home on a monthly basis?
Land acknowledgement. As we gather together, we acknowledge the sacred land on which we reside. It has been a site of human activity for 15,000 years. This land is the territory of the Huron-Wendat and Petun First Nations, the Seneca, and most recently, the Mississaugas of the Credit River. The territory was the subject of Dish with One Spoon Wampum Belt Covenant, an agreement between the Iroquois Confederacy and Confederacy of the Ojibwe and allied nations to peaceably share and care for the resources around the Great Lakes. Today, this gathering place is still the home of many Indigenous people from across Turtle Island, and we are grateful to have the opportunity to work in the community on this territory. We are also mindful of broken covenants and the need to strive to make right with all our relations. Last but certainly not least, we acknowledge the people of African descent who were brought here against their own will or in search of a safe place to live their lives and raise their children. Reconnaissance des terres. En nous rassemblant, nous reconnaissons la terre sacrée sur laquelle nous résidons. C'est un site d'activité humaine depuis 15 000 ans. Cette terre est le territoire des Premières Nations Huron-Wendat et Petun, les Scéniques et plus récemment les Mississaugas de la rivière Crédit. Le territoire était sujet de l'alliance de la ceinture Wampum plat avec cuillère, un accord entre la Confédération Iroquois et Confédération des Ojibwe et des nations alliées à partager et à prendre soin pacifiquement pour les ressources autour des Grands Lacs. Aujourd'hui, ce lieu de rassemblement est toujours le foyer de nombreux peuples autochtones de toute l'île de la Tortue et nous sommes reconnaissants d'avoir la possibilité de travailler dans la communauté sur ce territoire. Nous sommes également conscients des alliances brisées et de la nécessité de nous efforcer de guérir toutes nos relations. Dernier point, mais non le moindre, nous remercions les personnes d'ascendance africaine qui ont été amenées ici contre leur volonté ou à la recherche d'un endroit sûr où vivre leur vie et élever leurs enfants.
This webinar provides illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Black Business and Professional Association. The BBPA makes no representations, warranties, or guarantees as to assume no responsibility for the content or application of the material contained herein, and especially disclaim all liability for any damages arising out of the use or reference to or lines on such material.
And good morning, everybody. It is a pleasure to be back here at Community Space, the financial literacy program that speaks the language of the community. And it's been a couple weeks since I've been here, and I've missed it, but I'm back and I'm ready to roll. And we always say it's never too late to tell a friend to join us here. So let everybody know that we are here. And today we're going to be discussing something that is inevitable. They say the only thing in life that is guaranteed is death and paying taxes. And on that note, we've got a tax specialist with us here this morning who knows all about the tax system and what we are to do and not to do. And we can ask all the questions in that. It is tax season, and it is quickly approaching in terms of the deadline where we have to file our taxes. So without further ado, we're going to introduce somebody who's no stranger to the BBPA and to community space. After all, this is the brainchild of community space. So, ladies and gentlemen, again, a great good morning to you. And I'd like to mention and welcome our treasurer from the BBPA, Mr. Michael Pinnock. Good morning, Mr. Pinnock, or Sir Pinnock.
Good morning, Mr. Roderick. Thanks for that generous introduction. And I certainly will try to answer the tax questions and make a presentation and so on. But I'm not a tax expert in the professional sense. You have accountants who focus 99% of what they do on taxes, and they are the tax expert. I'm an accountant. I focus 99% on auditing and advisory services. But I think I'm in a position to assist the members here today with those general questions in taxes that the average person would ask.
All right, my brother. So I'm just going to read a quote here, and then we can get moving on it. So a tax is a fine for doing well. A fine is a tax for doing wrong. And that is by, let me see who that was by, the poet Mark Twain. Not an African poet in this sense. And actually, before I get on to that, not next week, but the week after, we're going to be having Sankofa Cypher, somebody who's definitely well-versed in the African sense of financial literacy and economics, join us. So that will be the first Saturday in May. We're going to have Sankofa here with us. So again, tell a friend to tell a friend. But back to taxes now.
So as we had started out this scene, I make another quote here. There is a popular feelings. As I say, nothing is certain but debt and taxes. And debt is certainly certain, but I'm not certain where taxes came from. But without going into deep history of taxation as we know it, most of the income taxes and corporate tax regime that we have anywhere in the world right now actually started out by being a short-term fix to finance the wars that the various governments were having. They actually started out the concept of taxing the population and taxing corporation at the time to support the war efforts, and it should have been a short-term stuff. But I suspect that when you talk to a geologist, they will tell you that 5 billion years is short. And I suspect it's the same thing with politicians. You know, short-term can be anywhere from a day to, a century. So taxes is still with us. And as Mark Twain says, it's plain on words, Tax is a fine for success and a fine is a penalty for, etc. But a question was asked off here, why taxes? And one of the answers I like to provide is taxes, and somebody that knows the origin of words. I can't remember the term he used for, the origin of words and the base concept of where words come from. But the word taxes seem to solicit a negative emotion, even if you're the tax collector. And if you recall in the Bible and so on, I think the tax collector was the most hated person then. And still down the ages, whenever people talk about tax, it's with a negative, But in modern time, as we sit here today, the concept of taxes, if used properly, if used appropriately, is designed to fund those activities that either individuals or corporation refuse to do or is unable to do because of its magnitude. So a state in the form of a government comes in and say, okay, we will do all of these things for all the citizens. But in order to fund it, you have to pay me. You have to contribute from your coffers money for funding it, because the government as an entity is not a business. It doesn't run and sell wickets and make a profit. It look at what is necessary for the overall citizenry, and it says, I need $1. Each one of you guys have to give me 1 cent. So if after you pay into the coffers of the government, then you see the benefits, the good roads, the security, the education, the health, then taxes will take on a positive connotation. But as it is now, people try to avoid it. People try to minimize it. People try to get around it in all sorts of shape and fashion, but it's gonna be with us for a little while.
Absolutely. It's again one of those things that I think will never leave us. Obviously, some places seem to have it a little bit easier than we do here in Ontario. I think we're probably, from what I understand, one of the heavier tax provinces. But as you said, I guess we could look around and see what those taxes are going to when you look at the quality of life in general here in Ontario. So that's, I guess, my first question for you. So how does government determine the tax that will be applied to us as citizens? Like, for instance, I know in Alberta, there's one of the taxes, either HST or PST, that doesn't apply, right? So obviously they have a lower tax rate. And at the end of the day, I mean, I think most citizens want to know how to save money and not give, all of their earnings to the tax person.
So I suspect the question is a larger one than most people probably sitting here thinking of. I suspect that the audience we have now is probably thinking about income tax in terms of personal tax that we file through a T1, or corporation tax that we file through a T2. But there are far more taxes, and you just mentioned one of them, sales tax. HST in some provinces, or in other provinces, they still separate them between the GST and the PST. And there's a bunch of excise taxes too. Taxes on import, taxes on export. There are taxes on gas. There are taxes to use the road. So there's a lot of taxes, and taxing authority and economists like to say there are two main types. There's a direct tax that you see, the income tax you pay, the corporate tax you pay. And then there's the indirect taxes. You see things that you pay premiums and certain things. Like, a lot of folks don't know when you go to the gas pump and you pump up. If you look at your receipt, you'll see that there's a large portion of that which is tax. So the $1.80 you see out there now, my guess probably $1 out of that $1.80 or even more is gas tax. But what I would want prepared to present today is to talk about the T1s and the T2s.
Okay.
So going back to the original question as to how is the tax determined? The tax in a world, you think about the world, different countries, different regimes do different stuff to determine their taxes. But generally speaking, how the taxes are determined is really on a mathematical basis. The government decide what is it they're going to do. What is it? We're going to fix roads, we're going to do schools, we're going to do this. They decide on the expenditure that they want to spend. And then they see how they're going to fund it. And that's the time they look at the individuals, they look at the corporations, they look at various indirect taxes. And through a mathematical algorithm, they decide who will pay what share of that. So for a comparative perspective, for example, individuals start with their income and make $1,000 a week. What can I use that $1,000 to do to satisfy my household? I have to pay for food, I have to pay for clothing, I have to pay for entertainment, I have to take care of the kids. So we start with our income and then drive it down to what we can spend it on, including savings. The government, on the other hand, do it the opposite way. Most governments, in fact, all the governments I can think of, that is the way they do it. They start with the expenditure, what I'm going to spend on, and then they say how we're going to fund it. So they start with money going out and then decide how the money is going to come in. And there's all sorts of algorithms that they use and methodologies. And sometimes they'll have a balanced budget, which is the predominant approach in Canada here at all levels of government. The idea is to have a balanced budget, even though the Fed is allowed to have deficit budget or surplus budget. But I know most provinces and municipalities, definitely municipalities, are not allowed to have anything but a balanced budget. And what that means is that the revenue has to be equal to the expenditures. The feds, because they're, it's a federal government, they're allowed. Like right now, the federal government, I think, is running a deficit in order to support the COVID efforts and so on. So they're spending more money than they've identified through their budget process. And that's okay, because over time, it will reverse. But the answer to that is really simple, Roderick. They start with what they want to spend, and then they decide and identify sources of revenue that will either match the spending, be less than the spending, or more than the spending.
Right. So you mentioned obviously the pandemic, and it's had obviously a major impact on how spending was done from the federal level, the provincial level, and obviously even the municipal level. So now, I guess moving forward, hopefully when this is all over, will those taxes or to catch up to fill that void where the spending was done unexpectedly, will that now come back on the taxpayer in terms of filling that void?
Well, I can't speak directly about that because that is for the Ministry of Finance and a bunch of people that work there at all levels. But from a pure economic and accounting perspective, the idea of government and taxes is to support things that the citizens need to get done, that individuals or corporations will either not do or don't have the capacity to do it. For example, we have a police services, but there was a time, and even right now, you still have a lot of private security services. So the government is there to provide the police services for people who can't provide private security. Mm-hmm. You have a postal service, which is for the citizen, but you also have private courier systems. So a lot of time, if you look in our current environment, there are stuff that the government do, which private organization or individual, as I say, either choose not to do or don't have the capacity to do it. And the government have to take on that role. National defense is a big one. How do we maintain the borders and do immigration? No individual or corporation will take that on. Health is another big one for us in Canada. And if you compare Canada to the States, you'll see where, we have a universal healthcare here, which means through taxes and otherwise, the government support the health system. Down in the States, it's a different kettle of fish. It's almost a hybrid of the private sector doing the bulk of it. And if you don't have good insurance, you can't get healthcare. So taxes are designed to support expenditures required for those activities. The problem we have, or the challenges a lot of individuals have, not necessarily in Canada, but if you look around the world, even a country like where I'm from, people question whether those tax dollars are going into the areas that they were designed to go. And so people have this negative connotation about, should I pay tax because it's not helping me? And that is where Mark Twain is talking about the tax become a fine, because you can't see the link between your contribution. It's actually a contribution you're making from your income to the national coffers that should come back to you in better roads, better schools, better hospitals, those kind of public services, better fire service, better police services, those generic stuff that the private sector don't do well at doing it. Now you'll notice even in government, when they take over private sector organization, like what happened in the States when They took over the Ford company when they had challenges. They only hold it until it was able to go on its own again, and they give it back to the private sector. So there are certain things that, they decide this is not what we're in. Private sector does that, and the private sector says the same thing. This is for government, and that is where taxes come in.
All right. So before we get to, I guess, some of the corporate questions about taxes, let's circle around individual taxes. And once you're working, if you're working for a company or for yourself, you've got to file taxes on a yearly basis. Just tell us about that for those people who maybe who are a little bit younger or don't understand how that works. So either that be from the T4 or if you're a sole proprietor or an individual, give us a little bit of insight on how that works.
Okay. All right. So when we talk about taxes generally, as I mentioned earlier, there's a whole bunch of indirect taxes that we pay. And if people take the time out sometime to look at the receipts they get, they'll see the different type of taxes. Because one of the things you have to do, remember we had a session here on invoicing and what have you. Mm-hmm. Government is very good at preparing invoices. Very, very detailed. So if you take your receipt, take for example, you go to the gas pump and you get that receipt. If you spend the time to look at it, you'll see where it breaks out the gas tax, both provincial and federal and so on and so forth. That comes down to the bill you pay. But that is not the taxes we're talking about a lot when people sit at a seminar or a workshop like this. They're more thinking about income tax. Mm-hmm. And so individuals are taxed on their income that they earn, and corporations are also taxing the income they earn. But the income for corporation goes through a more robust identification of revenues and expenses and come down to what is called a net income and even a taxable income after that. In an individual case, you're taxed straight on the money you earn. And so we call that, we use a T1. That's the form we use to file individual taxes. Yep. And everyone in Canada is taxed at 2 levels. They're taxed at the federal level, and they're also taxed at the provincial level on the same income. And somebody might say, wow, but if you go to the States, for example, that income is taxed at about 4 levels. You have the feds, you have the states, then you have the cities, then you have the municipalities. And even with the new municipalities, you have big cities. Say for somebody living in New York, for example, depending on where you live in New York, you're taxed on that same income 4 times. In Canada, we're basically taxed at 2 levels right now, the federal level and the provincial level. And so our taxes is based on our income that we earn from all sources, including foreign sources. You're taxed on your worldwide income, not just the income you earn in Canada, but if you've got pension coming in from other parts of the world, or you've got businesses that is generating, like you have property abroad and it's over 100,000 and it's generating rent and so on and so forth. All of that should be brought into your current books. But information returns, you do what is called information slips. You have a whole slew of slips. They all call them T this, T that, T4, T4E, T4AP. They're all T4s, but these are what they call information slips. And you should get your information slips no later than the last day in February. So by February 28th or February 29th, everybody's supposed to have either the T4, if you're a wage earner, your T4A, if you worked but you didn't take tax at source. And T4A is used for a whole bunch of stuff. But basically what it is anytime you earn any money that you weren't deducting source payments, then you have to still file a return with the gross. And then when you're filing the return, that's the time those different payments would get deducted. And there's T4Es for employment benefits, there are T4AP for long, for CPP, old age pension, etc., etc. So you have savings in the bank, and you get interest on your money in the bank. You get a T5. If you've got estate and trust, you get a T3. So every source of income that you have, there's an information slip that accumulate that income, and so you use that information to file your taxes, and you file it under what is called a T1. Now, the tax laws are structured with two basic taxes. So once you have your gross income, that is the money you earn from all sources. The tax law is structured in a way to say, we're going to reduce this income by a certain deductions and credits that will then take you down to like a net income. And there's further deductions in it that take you down to a taxable income. So there are two main types of deductions you'll see. One is called refundables. So if you don't use those deductions, you can carry them forward. For example, the students, somebody going to university or colleges, and they pay tuition and books and so on. Each year they create a credit, and if you don't use that credit, you can move it forward for 5 years. Things like donations that you make, if you don't use them, you can move them forward for 5 years. And there's a whole bunch of those kinds of deductions and credits that you can push forward. And there's something called non-refundable. If you don't have taxes, you can't use them. One of them is like, there is a medical credit you get. If you do operation, surgery, dental, optical, etc., and you come to 3% of your net income, and your medical expenses was more than the 3%, you can claim the difference between the 3% and the amount you pay. But you have to have tax liability to claim it again. So say somebody who's a senior who is not working and has no income and has no tax liability, all the medical expenses you lose because there's no liability to write it off against. Those are the ones that are called non-refundable tax credits. Like the disability tax credit, for example, if somebody's physical, mental, or otherwise, and the government say, okay, we can write down your taxes by about 8,000 or 9,000 each year. If you have no tax liability, then you lose that credit. It's not rollover to the following year. So you have, first from your gross pay, you have deductions that you take out. And one of the main deductions is the government have what they call for the want of a better word, they call it a threshold. There is a certain amount of income that no taxes are taken on. Right now, top of my head, I can't remember the detail, but top of my head, federally, I think it's about 13,000. Provincially, it's about 11,000. So if you work less than 13,000, you don't pay federal tax. And if you work less than 11,000, you don't pay federal tax. Those are straight deductions. Another deduction is a part of your CPP is deducted. Part of your EI is deducted. In fact, I think the full amount that you pay, it becomes a deduction because they don't want to double tax you. So the EI that you pay and the CPP that you pay is also a deduction. And there's some other deductions. We'll store them in the tax law. Then after that, you come to what is called your net income. And from your net income, you have tax credits that you write off. These are not deductions. These are credits that you earn through like donations, disability credit, tuition credits, all these things. You can transfer RSPs and that kind of stuff that will reduce it. In fact, I think the RSP is treated as a deduction. You can take it straight from the gross income, which incidentally is one of the best way to manage taxes and have a long-term benefit, is by investing in RSPs. And people should also understand that RSP is not tax-free. It is tax deferred. So if when you hit that pensionable age, you're still making a lot of money, when you start to take what they call the RIF, you start to get back your pension. If you're in a taxable bracket, you will still pay taxes. But for now, when you're doing it now, you don't pay taxes on it, but it's deferred. You have things like the lifelong learning credit that you can get, the own ownership credit that you can get. So for somebody that has a T1, it starts with this gross pay. There are a bunch of deductions that come out based on the tax law, and there's a bunch of credits that come out based on the tax law as well. And the difference that remains is called the taxable income. And we use what is called a graduating tax in Canada. Depending on where you are on the income stream, you pay different. So the lowest level is 15%. And I think the highest level is 39%. I don't memorize those stuff, but there are about 4 different levels. There's 15, there's 21, there's 22, right up to 39. And it starts from about 44,000, and anything above, I think, 100 and something start. And you pay on the marginal dollars. So there's a threshold which says from $1 up to 45,000, you pay 15%. Then from 45,001 up to another range, you pay an additional amount. So the persons that are in the top bracket just pay the difference between, the marginal amount that takes them from 150,000 to $1 million, that kind of stuff.
Right.
That is what you have in the T1. For the corporation tax now, it's a similar approach, but they have different deductions and credits over there. So first, the government define what is revenue. The government tell you what you can consider to be revenue. The government also tell you what you can consider to be expenses. And you take those revenues and you minus the expenses, and the difference is your net income, which is also your taxable income. And they apply various rates to it right now. It has a very complex formula, depending on whether you're owned by Canadians or you're foreign, et cetera, et cetera. But on average, most of what they call Canadian or private corporation pay between 10 and 12% total tax. If you're not, you can pay up to 39%.
Right. So that's if you're an individual versus.
No, not an individual. If you're an individual, you do T1s.
Right.
That is what you do. If you're incorporated, you do T2s.
Okay. But in terms of the corporate tax, the you said between 10 and 12%, I think you said?
Yeah, on average for
Right.
Canadian controlled private corporation. If you're a foreign corporation, it's a different thing.
Right. So, okay, I guess that will bring us into my question about for Black businesses, whether they be sole proprietors or have a corporate setup. Would it be, from your professional opinion, to be in the realm of a corporate structure so that you're taxed less under that tax law versus I guess being a sole proprietor where you're still open to being higher taxed if you're obviously making more money?
But one of the first tips I'd like to leave here, Roderick, you can make a note, I may forget how many numbers of tips. One should not look, this is my personal and my professional recommendation I'm making. Taxes should not be the driver for what you do. You should not be taking major business decisions on whether or not you're paying taxes and how much. In fact, in a modern contemporary tax regime, does not discriminate between whether you're an individual or a corporation. They have structured the taxes in such a form now that whether you do it as an individual through a T1 or you incorporate through a T2, you really don't get away from paying what is the taxes you should pay. Many moons ago, that was the people were taxed at different rate individually as against corporation. And so people stayed in, individuals stayed for a long time because they could bonus down and all sort of stuff. It is not beneficial now. What I would recommend that should be the tiebreaker is the amount of money you're handling and your exposure to other liabilities as an individual. We have done programs here in the past which suggests that if you start to hit that $50,000 a year annual revenue, it is best for you to incorporate the business. Because one of the first benefits of incorporation, you have the corporate liability shield. When you operate as an individual, everything you do, you're exposed as the individual. And so if you end up in bankruptcy, people can come and take your personal possessions. And most of the time, one of the big downsides is that businesses that are not incorporated rarely survive their founders because the business and the individual is one and the same. When you have a corporation, the ownership of that corporation can be transferred without affecting the operation of the business. Hence the stock exchange, for example, where the owners of the business don't even know where the business themselves sometimes sit. But the ownership is changing on daily, but the business is running. So my recommendation is not when you're going to do a business or you want to decide what to do, don't let taxes be the first yardstick, because your tax on the income is what you have made. If you start a business with $100 and at the end of the day, you end up with $120. It is not the $120 that they're taxing you on. It is the $20 that you have added there. Mm-hmm. And so your $100 that you start with is always your money. It is the income, that's why they use the term income, is the income that you make, that the government say, we want a piece of that income. And people have a problem with that because sometimes the government will take 10% and sometimes they'll take more than 50%. Okay. And it's the income they're doing for both the individual and the corporation.
Okay. So I'm going to choose my words carefully. There's a stereotype within the Black community that we are lacking, I guess you could say, the fortitude when it comes down to paying taxes on time, or usually if it's anything that gets a Black company that's doing well, is its lack of structure when it comes down to paying taxes. Touch on that. Is there any reality in terms of what you see or what you've experienced, and if so, why is that?
Well, I'd hazard a guess. I've certain Sankofa, when he does his thing with the African proverbs and so on, that what you'll find is that there's always some truth and facts in myth. Every story you hear how wild it is, there's always some part of it that started on the basis of facts or over time acquire such qualities. No, I don't think the Black space when it comes to taxes is worse than any other space. I think generally speaking, as I said earlier, the word taxes connotates a negative emotion. Mm-hmm. And therefore nobody want to pay taxes. The American Revolution, it is written, started on the basis of not paying tax to King George because they thought there's no representation. Why should we be paying these taxes? And if you are a student of the American tax system and study it, people spend far more effort in trying not to pay taxes than just to pay the tax. In fact, in our own tax system here in Canada, there is a rule that they call the general anti-avoidance. I can't remember what the last word is, but generally anti-avoidance rule. That's not what, it's anti-avoidance. And the essence of that section is aggressive tax position. If you're willing to pay $1 million just to save $1,001,001, you're going to trade through the window, we're just going to charge you. So, one of the things I see, passing in the chat here, and one of the myth or stories that go around is that corporations are better able to divert tax or hide it or what have you, and so on and so forth. But the tax people have also come up with the concept of anti-avoidance rule and aggressive tax position. And what they're saying is that don't go out of your way aggressively, as I say, spend $1 million to save $1,001,001 because you don't want to pay the taxes. So generally, I don't think it's different in all the spaces. I think in our environment, though, as Black folks, and again, we always touch on the history, the 600 years where we were forced to work for free. So we didn't have any concept of paying taxes because we didn't get income. We were you just go work. What you brought to the table was your ability to work. And then you get the means from the, a little food, a little shelter, what have you. And then post-emancipation, we're thrown into an environment where we still had to work. And we had to work for very close to zero.
Mm-hmm.
But now
we're taxed.
We understand that not only that we have to find our own shelter and clothing and entertainment and what have you, but there's somebody called Uncle Sam or Uncle whatever that we have to give a piece of our money to, and we couldn't understand why we have to do that. Because we don't see the benefits in our environment. We don't see the roads, we don't see the schools, we don't see the policing that benefit us, etc., etc. So if I was to give a why, I would say that's an historical why. Mm-hmm. Outside of that historical why, though, what I found in working in contemporary taxes is our books and records are not in a state that we can determine what our true income is, and therefore what our true tax liability is supposed to be. I would say it's more a book and taxes, a book and records. People want to file the taxes, they want to be good corporate citizens, but they don't know where to start because they don't know what the true income is and they don't know what the true expenses are. And therefore the difference between the two is difficult for them. Right. Sometimes they get bad advice. Just file this and you show that they make losses. Keep filing these things and show that they make losses. But I think with better training, better understanding, better preparation, we will pay our taxes.
Okay. So that was going to be my next question in terms of the best practices so that we're not caught at the end of the tax season and not knowing where we are or, how we're going to file. And obviously sometimes that just gets put on the back burner and then, we'll file next year and then it just compounds and becomes more complicated. So what are some of the best practices that individuals and businesses can do to stay on top of their taxes?
So here's a number 2 you're writing down for me here. Employ a good accountant. Don't try to be the jack of all trades. You're in the entertainment business or the business of entertainment. You know how to get artists to do things, you know how to get legal documents sorted out and so on and so forth. You're an expert in that area. Leave the debit credits to people who are trained to do it. Get an accountant and get a good accounting package. Don't mess around these Excel flat files and because your daughter or son know how to do it, you say, okay, here's some invoice you don't want here. Invest in the finances and accounting of your business. Invest in it. Don't see it as a cost. It is something that is necessary for you to do. When you just started out, it's probably difficult. You can't pay all the monies. And there are accountants who do what they call controllership. They come around and they spend a day or two each month with you and they bill you accordingly. So you can get those services. And as you grow, you bring the service in-house. Even, I'm saying this now, as an accountant, when I become a very rich man, I won't be doing my own books. because I should be spending my quality time creating wealth rather than trying to balance the ledger and pass it on to people who will focus on it. So I would say to my Black brothers and sisters in business or otherwise, get an accountant. Even doing your own T1, it's supposed to be a simple exercise, but it's not. I saw one of the questions in the chat here, how can I make sure that I claim money from HST for corporate event and that sort of stuff? Get an accountant that focus on those things. How do I ensure? Because one of the things about filing T1s, very rarely you miss a credit that the government will automatically give to you. But if you miss an expense or even an income, they will adjust your return. So the onus is on you. They call it self-preparation, self-assessment. That's what we do in Canada. We self-assess. Somebody don't assess us and say, this is what you owe. We sit down and we self-assess what we owe the government, and we cut a check and we send it to them. When the government review it, if they find discrepancies or differences, they adjust it. That is why you get a reassessment. But the reassessment tend to go one way. I don't know if it's by design or just, it tend to go, if you owe more money, you have to pay. But if you overtax yourself, most of the time it goes through. But here again, you need to retain a professional who knows the tax law, knows what are the credits and the deductions coming up each year, and can get them in.
Right.
So that is what I'd recommend there.
Right. So you mentioned, like, for instance, a startup. And as we know, within the last 2 years, things for Black businesses have been particularly difficult just with the pandemic, and obviously sales, depending on the type of business that you are running, could have been impacted adversely. So how then would you recommend, for instance, a startup business who may not have that capital to pay an accountant? Because accountants are professionals, and they're not working for minimum wage, right? How would you suggest to keep on track to make sure that we're not giving the government extra money, because we understand obviously that there's penalties for filing late and obviously whatnot. So how would you, or what would you recommend for those people who are just making it?
And thanks for asking that question, because my answer to the previous question could be also construed, or could be construed that it's self-serving. I'm an accountant and I say get an accountant. But this follow-up question allow me to remind folks that in this modern time, there are software that is available, inexpensive software, that for people like startups will allow them, very simple, to keep their books and records reasonable. Because remember, as a startup, you don't have a lot of transactions, you may not have a lot of expenses. So there's software out there. And I'm not calling names here right now because I'm not paid to advertise any of them.
No doubt, no doubt.
Yeah, but you can Google and you'll see a whole bunch of them for $100 for the year, that sort of stuff. And these are very simple, straightforward software that actually walk you through how you load on your income, how you load on your expenses, and generate a report that is enough to file your taxes on. So for startup and so, if you don't have the big capital up front, you can invest in those things. But there are also accountants like me that work with startup organizations and build them according to where they are in the life cycle.
Right.
So even though, we make good money and we bill people high fees because we do very good job and keep them out of jail and paying penalties. But we do adjust our fees and so to be commensurate with where you are and the amount of effort that is involved in doing it. We have people that will do a T1 for $30 because all it is a T4. Then you have T1 that people pay thousands of dollars to do because there's all sort of capital gains and investments all over the world and that kind of stuff. So that is all we can deal with that.
Right. So one of the things.
Yes, Abu, Go ahead.
But one of the things that myself, in terms of being an entrepreneur, also, and speaking to other entrepreneurs, know that obviously there is an onus on yourself to keep up, and then it basically will entail discipline, because like, even if you are doing one of the programs that you can buy and then it can help you keep track of your books, it's still the discipline of doing that once a month, for instance. And maybe it's categorizing the areas of expenditure or what not, so that will make it easier for the accountant to come in and look and see what's going on. So in terms of those best practices, what would you recommend for those persons who haven't yet got to that threshold of having an accountant come in and being able, or a bookkeeper to come in and just keep track of, for instance, even their monthly expenses and income, right? What best practice would you suggest for those people, just to make sure that it's easier and I guess better groomed at the end of the day?
Okay, so thanks for that question as well. And I just see a question in the chat here. I'm trying to get comfortable with Zoom where I can read and so on, Not sure an accountant will be necessary for a sole proprietorship startup. And then you pivot with the question of discipline and how you do stuff. Accounting as a discipline, as one of those things we do, like marketing or e-com, is very practical. In fact, we had a course here last year where we had a PhD that come and explain to us accounting. Mm-hmm. And she reminded us that of the other disciplines we have in finance, economics and marketing and those kinds of stuff, those things emerge out of a process of people want to find better ways to do things and interpret the future. While accounting from the biblical days was a practical way to measure wealth. Now, accounting and accountants comes with the discipline you're talking about. A lot of folks believe the bean counter is just a bean counter. A lot of businesses don't talk to their accountant. They only believe the time you need an accountant is when it's taxes. Accountants are there not just for taxes. Taxes is a byproduct of what accountants do. Mm-hmm. Accountants are your trusted advisors because they know more about your business than you. Mm-hmm. Strategically and conceptually, you, the owner, know where you want to go and where you think you are. But the accountant will tell you precisely in very, very copied details what is happening in your business. And that person will do it consistently with the discipline that is required. So that is why I say to folks, do not underestimate the reason for an accountant, because not just for taxes. If you wanted somebody just to do taxes, anybody could do taxes. Or, in fact, I say to folks, I remind folks all the time, taxation is not accounting. We do it as part of our curriculum as accountants. Every accountant has to do taxation. But taxation is not accounting. Taxation is law. Lawyers do taxation as well as part of law. The Income Tax Act is not an accounting document. It's a legal document. People go to prison for breaking the rules that are in the Income Tax Act. Accounting for income tax is very simple. You debit income tax expense and you credit the bank or accounts payable. It's the computation to get to the tax liability that is involved, and it's all law. Mm-hmm. But the discipline you talk about is the reason why you need an accountant, because even if you buy a software, you have to have the discipline to load on. I have software now that talk to the banks. You just have the software, you link it to your bank, and each, if it's automatic, it will upload the system into your software, and then it will generate various reports. But if you're unaware of what these reports are supposed to do, they won't help you. You get a trial balance, you don't know what it's supposed to be. You get a balance sheet, you don't know what it's supposed to be. You get an income statement, or you get a cash flow. Accountants are trained people like lawyers and doctors and dentists and engineers. We go to universities for at least 4 years, and we are continually upgrading ourselves to what they call continued professional development. Because the world of business, as I see, language, accounting is a language of business. And if you're running business, you need to know accounting. But you can't be the jack of all trade or the Jill of all trade. So that is why I said earlier, if you really want to do what is best practice, and you can afford an accountant, bring the accountant on board. If you can't afford the accountant, you work with a software. But guess what? Eventually, you have to come to a trained person that can interpret those financial statements. And yes, even sole proprietorship, especially sole proprietorship, needs an accountant, because when you're a sole proprietorship and you're not incorporated, your accounting includes your private assets.
Mm-hmm.
It's not shown in your books and records, because it's not part of the operation. But God forbid you hold taxes or you hold some creditors' money and the business itself can't pay. You're coming for your personal assets, and there's nothing you can do, because there's no difference between you and the business legally when you're a sole proprietorship. And that is the time you need to have an accountant to separate the commingling of cash. You have businesses that are sole proprietorship that have one bank account, and everybody from the cousins to the wives are in that bank account, including the business. So when something go wrong, the first thing they do is garnish that bank account. And you can't say to them, oh no, I'm getting some inheritance out of Jamaica that puts in 100,000 every year. That 100,000 is not for the business. No, they garnish the bank account, and any cash that's in the bank account is used to satisfy the debt. But if you have a corporate bank account, they have to go to the corporate bank account first. And then they may have to sue you as an individual to get to your personal businesses.
Right. All right, we have a question here from our very own Victoria. Good morning, Victoria. How are you?
Good morning. I'm well. So just want your thoughts on this. So I have been told that clients or customers don't like to see taxes. So just build it within the price. But then I've also heard that, well, if you were to get audited, it probably wouldn't be as clear because it's not separated on your invoices. So just want to know your thoughts on that.
Right, so I'm going to try to answer that in 3 parts. First of all, it's illegal.
Oh.
Right? Secondly, remember we did a course here on invoicing.
Mm-hmm.
It's in Canada, and we show you what needs to be on an invoice. And one of them was you have to separate the costs from the taxes. Okay. And thirdly, and I mentioned it earlier that it's illegal, if the price does not show the taxes separate and you're audited, the government have the right to include in whatever figure you put there the fact that taxes should have been there, and they will, through deduction, take it out. Giving an example, let's assume, and I'm going to use Canada now, we have an HST tax, because that's an easy one for people to follow, which incidentally, Roderick, is what get a lot of the Black community in problems. It's not income tax, it is a sales tax that get them in problem. Because even if you're showing losses, you still owe the sales tax because it's not your money. So let's assume, and I'm going to use $100 because it's an easy computation. You give an invoice of $100, and the taxes here, the HST in our province is 13%. So the invoice should show $113. When it's correct, you pay the vendor either $113 or you receive it in revenue from sales, $113. You break out $100 as your straight expense or your straight revenue, and the $13 is owed in trust for the government. It's not your money. You just collect it on behalf of the government. They have to pay it over once a month. And a real big organization like these big malls and places like that is every single day you pay it over, because you're collecting billions of dollars in HST each day. Now, if you choose, for example, to say to the person, don't pay taxes, give me the $100 and don't pay the tax, and you're audited, and it's proven that that $100 was sales, what the government presume is that included in that $100 is their sales tax. So they're going to come to you for $11.50. Actually, let me do the arithmetic while I'm here. So if you take $100,
Yeah, I think it's like 88.50, though.
divided by 1.13, yes. So I was right. So the government is saying that $11.50 is their money. And because you did not collect that money from the customer, you have to now find $11.50 out of your cash to pay to the government. And it's not something I recommend. I mean, as a human being, somebody come to me to do taxes, and another thing with folks who didn't mention, probably it's in the chat, folks who are married or live in common law, and they consistently choose to file a single. It burned them down the road. If one of those partners, God forbid, pass on, it is difficult now to prove that you're entitled to death benefits and so on and so forth, because you have always been filing single. And the Tax Act is not designed. So if somebody come to me and I know they're married or common law, I'm not doing the taxes if they're not filing like that, if I don't know. And guess what? I ought to know, because those are questions you ask. Are you got a spouse, or you live in common law? It's the same effect. So if you don't ask, I can't, for example, as an accountant, see to the taxing authority, I didn't know the person was married. Because I'm supposed to ask that question directly every year. And if I didn't do it, I didn't do a good tax return. And so if I do that, I know the person is married and file them as single, I'm actually breaching the Tax Act. So it's not a recommendation of mine, because it's illegal and it creates all sorts of accounting challenges down the road. It's a modern world. People do things until they get caught, and sometimes they never get caught. A lot of places you go now, they'll tell you if you're paying cash, they'll charge your costs, but if you're giving them a check, you have to pay the HST. You should give them a check and pay the HST. Because a lot of time when you pay cash, you haven't covered legally. You see that receipt that you get, it's a contract between the buyer and the seller, And a lot of time you don't get a receipt when you pay things in cash. You have nothing to go back to and say, I purchased it here and it's damaged. All kind of stuff. But sometimes we don't think like that. We just think on the fly, and 13% of $100 is $13, but 13% of 100,000 is $13,000. And so people believe if I can save $13,000, I can do other things. And it's a personal decision, but as a tax person, I don't get myself in those stuff. So I recommend to you, Victoria, pay your tax.
Or have your customers pay that tax.
Yeah.
At the end of the day, when they're gonna go claim, that this is what they spent on, then it's gonna also come back to you possibly, right? So
it probably is circling, because you can bend the law, but if you break it, you get yourself in trouble. That is why the law is written with all sorts of exceptions, and you can call and get one-off ruling. You can bend the law. Nobody say you can't bend the law. But if you break the law, you're in trouble.
right.
So what tax people do is not to bend the law. They look for loopholes, and sometimes the loophole is there until they plug it. Quite recently, I think 2 or 3 years ago, you may have heard the Fed government talking about this thing where people were creating companies and paying themselves this, and they remove some rules to level the playing field. They create the laws, and there's sometimes technical deficiencies with it. And because there are technical deficiencies, people exploit it to minimize their liability. But as soon as the government get hold of it, they just plug it. So you can bend the law. If there's gray areas that interpretations are weak on, you can decide this is why you do it. And if it makes sense, the government will go with it. But if you break the law outright, you're going to be in trouble.
Okay. So we've got a question or a comment from our brother, Bese Saka Kofi. Good morning, King.
Hey, it's always good to talk about taxes. One time when we had taxes, we took care of the people all the time. Now we pay a lot of taxes and sometimes we don't get the benefits, right? So, but what I want to talk about though with this tax thing, and I heard you, the other day the government did a paper, the federal government, and they recognized my accountant that these Europeans were ripping off the government. Them never was avoiding tax. Them was evading. The Deloitte and Touche and those big companies helped them to move it offshore. Robbery. The government decided to take a deal with them, give them some slap on the wrist and so forth. So I just want to say always the biggest culprits is them people. But I just want to say for the rest of people, my tax strategy always is a Pan-African one. So every year I'm going to give back money whether I make money or not. So I must make money. I'm going to give money to children in Haiti, an orphanage and a clinic. I'm going to give money to Jamaica. I'm going to do business in Africa. So I know there's at least $10,000, $12,000 in donation charity. You know, if I had a political party, I'd make a contribution. So I put that in because I got to make money, but I got to pay taxes. So how do I mitigate? So I just want Michael to talk about mitigation with a communal thing. You know, next year I might have to membership in Bbpa, donation to all of the people we're working with. And then that comes back to community, and then you use that to also lower taxes.
As per usual, Sankofa, it's always great to hear you with the thoughts. And you're absolutely right. As I had started out by saying, taxes tend to have a negative connotation, but if you look at it like Sankota, it's your contribution to society that you have to do. And the Tax Act itself is filled with, as I say, you know, bending is not a good term to use. But what it starts out by saying, you're taxing your income at this rate. However, if you do these various stuff, the government will allow you to reduce your tax liability because you're doing things actually on behalf of the government. When you make a donation to Haiti or a donation to, you know, what's happening in like Kazakhstan now, or, you know, the Ukraines or wherever, and you make some donation there, what you're actually doing, and that is why the government measure the value of donation that's coming in, because to the extent that the citizenry is donating into causes, it minimizes the need for government to actually fund it directly. So you can take up those contributions to churches and social organization, charitable organization where you get a tax receipt, etc., etc. And anything above $200 is actually a 29% tax credit. So for the first $200, you get 15%. And then everything above that, you actually get 29%. So if you give a donation of $300, you actually get a tax credit of 29 plus 15, what's that, 44. You actually get a direct dollar for dollar reduction in your tax liability by $44. So these are the sort of communal thing that Sankofa just mentioned that. And that is again, one of the reasons why, if you really want to, I used to use the word optimize, but again, on this very program, we had a presenter who says, what we should do is not talk about optimize. We should maximize our after-tax dollars. One way to maximize your after-tax dollars is to be able to comb through the tax code and utilize all the options that give you there to reduce your taxes. Yeah. And that is why you need kind of like an expert to help you shouldn't try, especially when you're making big bucks. If you're just a T4 person, that's all you do. Your thing is very simple. The only thing you have to reduce T4 taxes is RSP is a big one. Your pension is a big one. If you have young kids right now or kids going to school up to 25, you have that kids allowance there that can reduce it. Kids going to university, you have transfer the university allowance. If you're the only person working in the home, or if you're the only person, if you're a single parent, you can get a spousal allowance. If your kids go to daycare and all that kind of stuff, you can get a tremendous amount of allowance to reduce it. In the corporate world, there are far more, and as Sankofa mentioned, corporate people, because they do pay a lot of tax in absolute dollars, not necessarily in relative terms, because the taxes may just be 8 or 10% of the overall income, but it's still a lot of money, millions and billions of dollars. They spend a little more time doing tax planning, because I remember too that taxes, like salaries, you can't hold people. You have to pay the tax when it's due. You can't accrue it and it just stay there. It takes cash out of your business. So if you can minimize or maximize the after-tax dollar, you keep more cash in your business. So the corporate people spend a little more time than we to do that.
Yeah. So question, Michael, and then we'll get to the chat. So in our community, it's no lie that, we see deficits when it comes down to our schools, when it comes down to our communities. And even though each and every one of us over a certain age or who are working, or even if you're not working, if you're on social services or whatnot, or assistance, you're still paying tax. How could we make sure that our tax dollar comes back to our community to give us the benefits and the value that taxes do in other communities?
Well, there's a number of ways that can be done. I know right now there is a tax advocacy group, and I'm certain there's a national one, there is provincial ones, and there is municipal ones, and so on. And these are a bunch of people that come together that look at taxes and how the tax dollar is spent and advocate to various levels of government to improve on the efficiency of how they do that. As to whether our people participate in those things, I don't have the statistics on it. But one thing we could do is that, as part of our own social organizations that we have, we could create committees that focus on not just the paying a tax or the not paying a tax, but hold the government accountable to better use of those tax dollars. In the US and Canada and big first world country, you have very strong organizations that when government want to increase tax, they have a difficulty doing it because they can mobilize thousands of people in writing letters and having demonstration and so on. So that is something we could do. We don't spend a lot of time on doing that. We more try not to pay individual taxes rather than
right. And as our brother
group.
Yeah, as Sankofa was also saying, obviously, us as a community could use our collective money in terms of whether that be the charitable donations that we're giving to obviously write off some of that money or some of that, and focus it and target it to certain areas like schooling or housing or, to the nonprofits or charities that do this type of work that will come back to our community. So I think one of the things that we should be doing and can do is that focused targeting where we can give back to our community intentionally and see the benefits of that way too.
When you sit, and I know most Canadians do, they sit with an accountant or a bookkeeper or somebody who know a little more about tax. Through planning, because I demonstrated to a lot of clients over time, and it tend to work sometimes the first time you do it. You can look at what your tax liability will be before it's due.
Mm-hmm.
And you can decide, should I pay $10,000 in taxes? Or should I use $8,000 to buy RSP?
Or give to the BBPA.
Or give to the BBPA. What donation does though, and this is something people probably don't know, it's not the dollar that you give that becomes the benefit in terms of taxes. It's a percentage of that dollar.
Mm-hmm.
As I said earlier, for the first $200, you get 15%. So when you make a donation of $200, you actually get, and I think the calculation was wrong earlier, it's more than 44, it's like 60 something, because for the first $200, you get $30 tax credit. And for anything above that, you get 29% tax credit on it. So if you were to make a $10,000 donation to, say, the BBPA, we give you a tax receipt, what would happen is that the first $200 would give you $30, and the next 9,800
will be 29% of that.
Yeah, 2,000. So from a $10,000 donation, you have a tax credit, 2,872, which write off your tax liability dollar for dollar and can be carried for 5 years.
Right.
So the question you ask yourself, should I pay the government $2,872 in taxes? Or should I make a contribution to the BBPA for $10,000 and don't pay the tax? And it depending on your mood and what you're in and why you want to do what you do and so on. But those are some of the communal stuff I'm certain Sankofa is thinking of. Because you have to pay tax. You know, there's no way of getting around it. And what the government would say with the donation, the reason why they do that is rather than the BBP reach out to the government to say, give us $10,000 so we can do stuff with it. You gave us the $10,000. So the government don't have to give us that $10,000. But in addition to giving us the $2,000, you get a tax liability, a tax write-off of $2,872. So that at the macro level is kind of how the government think about the benefits of tax receipting.
Right. All right, so we're going to get to some questions here from the chat. So somebody is in the process of needing to do taxes for a deceased person. Could you talk about that in terms of what that would entail and any advice for that individual?
Yeah, well, first of all, it's similar to doing any other taxes with a couple of nuances because it's a final tax return that you'll be doing. So one of the nuances that you have to get a report from the government, they call it a Schedule C. And what it basically says is to ensure from where the government sit that this deceased person or the estate does not have any back tax for the government. So you have to get that sort of like a clearance report, I think they call it. So that's one of the first things you have to do. You get a clearance report because the person that files the return and become the trustee, if there's any outstanding taxes, they're going to be liable for it. So you want to clear that first. And it will tell you whether there's taxes or not. And then what you do is ensure that you gather all the income for that year. And there's a time frame in which you have to do. There's a specific timeline after the person dead and what time of the year. It's not rigorous. It's just you have to know the details. If the person died before June, you have to file it by June. If they died after June, and et cetera, et cetera. But if you follow those little nuances, the key thing is that you have to get that clearance certificate. A lot of folks don't do it, and when they file the return come by that. This estate who there's some money, and the question is who's going to pay it.
Yeah.
You know?
Okay. Okay. And some people are asking me personally if you could share your information in the chat, outside of obviously what you do here as a volunteer at the BBPA, knowing that you're an excellent accountant. So people are asking if you could share that information in the chat so that they can get in contact with you. Another question that we have, can a person's principal residence / home be depreciated to reduce taxes?
And the answer, it depends. If it's just a principal home as you have it now, I think one of the only benefits you get from it for tax purposes right now is that you can write off the the interest income that you pay on the mortgage when you file the return. And you write off the property taxes as well. But if you start to use that home partially for business, and COVID-19 shows that it's doable. Before that, it was a big issue. But now COVID-19 showed a lot of folks had to work from home, and then you create what is called an office in the home environment. And so you designate a certain area, which is your office, and you can, let's assume that area designated as, say, 25% of the overall square footage of the house, or a couple other bases you can use. Square footage is the most popular one. Then 25% of the expenses of the home, including wear and tear, through depreciation, can be charged.
Okay. And again, I'm getting more requests for your information in the chat, Michael. So please.
I wonder if Victoria can help me. I think Victoria know my Michael.Pinnock at Bell, and she know my personal number as well.
Okay. So another question here. What are some of the communal activities that the Bbpa supports? So, I mean, I guess I can jump in on that one. We support Black students in post-secondary or in terms of training. And we, every year for the 40 years that we've been here, have been giving hundreds of thousands of dollars. And you could correct me, Michael, in terms of the numbers, but I believe now we've actually even surpassed the $5 million mark.
Listen, let me talk to him on the Zoom.
where it comes down to contributing back to our community and helping our future, which are our students. So I think that is actually probably the largest way that the Bbpa works back and gives back to the community and empowering and enabling our students to have some of that tuition fee paid for via the Bbpa and the dollars that you also would donate.
But even what we do here, Roderick, this very session is a communal activity. We're hoping that by having this session, we expose people, because there's a lot of folks who could, want to try to do their taxes on their own, and there's nothing wrong with that. The CRA website has a instruction that walk you through line by line. They used to provide a book. They stopped doing the book now because a lot of folks are using software to do it. But 5-10 years ago, you used to get your tax return mailed to you with a book that walk you through every single line in the tax return and explain what should go there and why it goes there. So even having this stuff as a communal stuff. We have a tax clinic. I don't know how publicized it is, but we have a free tax clinic during tax time, which opened mainly during the month of April, because April 30th is the last day. And if you're a business, you can file in June and so on. But there are other things that we can start to do as a capacity build, like advocacy around some of the taxes, specific tax owed people. Because a lot of community, what they do, like a lot of the changes people see, because there's certain benefits there's certain benefits you get from the government now that is not taxed. It's not even shown on your tax return. The baby bonus and the child care payments and those things, they're not taxed.
Yeah.
So they're not even filing a tax return, but they're based on you filing a tax return, which is something we didn't touch, Roger, and I probably want to spend just a second on it now.
Absolutely.
You do not have to file a tax return anymore, even though people believe everybody have to file a tax return. If you do not hold the government taxes, you do not have to file a tax return. But it's good to file a tax return, especially if you're getting benefits from the government now. Because if you don't file a tax return, they will not continue the benefit. Because your tax return, even though some of the benefits are not taxed, it is your family income that they use to decide how much money you get. For example, a family which is a single parent with 5 kids get a different childcare benefit amount depending on their income. So not because you're a single parent with 5 kids mean you can't take care of them. If you're a lawyer or brain surgeon or somebody like that, you won't get the benefit. If you're on social income, you live in social housing and that kind of stuff, then you get more. And as the kids age out, you get less and less until eventually you don't get any more. So you have to file your return. If, you know, and there's a number of reasons why you have to file it, but if you don't owe the government, you do not have to file returns.
And then you brought up a great point right there, Michael. So if you do owe the government, and you know, as we all know, like for instance, if somebody hasn't filed in the last 3 years, and you know they finally get around to it, have that accountant do that work, and you owe the government, is there a way that you can speak with the government to, for instance, reduce that penalty, or how much you owe? Is there any wiggle room to do something like that?
And there is, and again, I go back to, without sounding self-serving, that is where you need a professional accountant. Just like how judges don't like to talk to people who are not lawyers. And I'm going to go out on a little limb here, I may be wrong, but I would say the CRA prefers to talk to accountants because they speak the same language.
Mm-hmm.
And I know from practical application that the government of Canada is not gung-ho on charging interest and penalties. That's not their dossier. What they want is people to pay stuff and pay it on time. And if you don't, they will charge you interest and the penalties. But you can make representation to them. They call it tax relief. You can make representation and they will remove all the interest and penalties, and you just pay the principal amount. Right. That's done through an accountant that speaks the language, can write the right report, can also, you know, understanding and clemency and stuff like that. And it's granted more often than not.
Okay. So take that in, folks. If there's any last questions, we're going to get them in right now because technically we've got 1 minute to go. But if there's nothing right now in terms of questions, we just wanted to say, always thank you very much to our treasurer, Michael Pinnock. Is that a question right here we have? No. Okay. All right.
Somebody was asking, where do I get the clearance certificate? You have to apply for it through the CRA.
But then they also asked for your number. So I think that was, they'll probably be getting in contact with you.
Okay.
And, yeah, definitely so. So yes, I just wanted to say thank you very much, Mr. Pinnock, for your knowledge, your wisdom, your insight, and obviously serving the community tirelessly and relentlessly. And you know, we're grateful to have you on our team. And for those of you who are not yet or haven't yet bought your tickets for the Bbpa Harry Jerome Awards, it is not too late. We are having a stellar event next week at the Beanfield Center, located in downtown Toronto, Exhibition Place, where we'll be celebrating Black excellence and 12 individuals who've gone above and beyond in terms of representing our community. And one of the things that we have to do within our community is to acknowledge and recognize and celebrate those people who are continually putting themselves out there to write and rewrite a new narrative, so that not just our young folks, but our community can be seen in the light which it deserves to be. So for those of you who are interested, you know, get your tickets at harryjeromeawards.com. And if Victoria, you could put that in the chat so that people can go right there and get their tickets. It will be amazing to see you. And, you know, for those of you who are probably over the age of 40-ish or whatnot, but, you know, you listen to radio or heard your parents' records, we're going to be having the lead singer of the legendary soul sensation group, the Stylistics. Yes, you know, Bet Your Boy, Golly Wow, and People Make the World Go Round, and, you know, all of those other hits that the Stylistics have sung over the years. They will be here in Toronto, and it will be the main act. So it's a little bit more in terms of what you'll also be getting at the Harry Jerome Awards this year. So we're looking forward to it. Tickets are going very quickly, so get your tickets today for the 40th annual Harry Jerome Awards. And again, in terms of where your money will be going, it's to support programs like this, but also to support students who are, our future, and we are heavily invested in our students and will continue to do so. So on that note, it's been a great session. Thank you very much again to our sponsors, RBC and the Donald Reed Estate. Thank you very much to the Bbpa, and again to you, Michael Pinnock, for all your work that you do on our behalf. And as we say, we'll see you next week, same time, same place, right here on Community Space, the financial literacy program that speaks the language of our communities. So take care, stay safe, and we'll see you next week. Peace.
Thanks for having me, Roderick.
All the time, my brother. Community Spaces, the financial literacy program that speaks and reaches the community. Are we going to be in a better place, or are we going to be still, quote unquote, behind the 8 ball?
Because of the historical disadvantage that our community has, we most times do not have financial role models. Without that, economically and financially speaking, we'll always be at the bottom.
Keep proper books and record, because the data drives the strategy, and the strategy drives the profits.
COVID-19 sort of removed a veil. It's really exposed the structural barriers that our communities face.
These last 2 years, where there's been a heightened emphasis on the well-being of Black people, has influenced the influx of funds and opportunities. The time is now. How long is that window going to be open?
We'll see you next week, and don't forget to tell a friend to join us here on Community Space.